702.
You're listening to the best of The Money Show.
The Money Show.
Welcome to the best bits of The Money Show, a digest of some of the most important thoughts, insights, and I suppose jokes from the shows and the interviews that we did this week. If you'd like to hear more, if there's someone who you think would benefit from hearing some of it, if you think it may just appeal to them in some way, please go to your podcast app and search for The Money Show. It would be good if you gave us a rating as well. To start, some of the news stories we thought were important this week. And the Vodacom Group finally reaching an out-of-court settlement with their former employee, Kenneth Makate, over the long drawn-out please call me dispute. This has been going on for so long, and finally it looks like we have clarity over what's going to happen. Zoran Mamdani, the newly elected mayor of New York, the youngest mayor since 1892, the first Muslim mayor, the first mayor born in Africa, and insofar as I know, the first mayor of New York to have spent some of his school time actually in Cape Town. And one of South Africa's most valuable parcels of undeveloped land is 3.9 hectares, but it's right next to Sandton City and right next to the Gautrain station. It's for sale as part of the liquidation of Regiment's capital. If you're interested in the history of Regiment's capital, Google Regiments and Gupta. Tonight, we bring you a mixture of stories from the world of money from the week that has been. Your shapeshifter this week was Mpumi Tyikwe, the former CEO of Sastria. Sastria is the insurer of last resort. Mpumi is a born storyteller, has led a very interesting life, and has plenty to say about South Africa and where it is at the moment and what that means for insurance. Here's Mpumi Tyikwe.
A career in Sastria, people who have regarded it as boring.
Yeah.
Basically, they were seen as a company that takes the premiums and never have to pay any claims. Yes, we've had those sort of things. And I think, yes, a year later, that's when I took over. And then you start realizing that there are certain things that you have to do. In fact, what I always say, Stephen, I had to unthink everything that I knew about insurance when I joined Sastria. Because if you think about July 2021, it happened over 10 days.
Yeah.
But it destroyed everything that was built over 42 years. So, that old saying, it's easier to destroy, but more difficult to build. And one now has to take a longer-term view. As you've seen, I've spent most of my career in the short-term business. So more or less in that industry, you react as quickly as things happen. And here, you have to think 10 years, 15 years down the line as to what things are going to be like, and then thereafter build accordingly. Of course, you can miss it completely as to what the world would look like 10 years, and hopefully you'll be close enough.
I mean, this is the thing, is that, and I mean, there were endless conversations for a while. Could it happen again? Which is a conversation with real political overtones. I mean, there's a lot hanging. It's the kind of future of South Africa question, I suppose, in a way, for lots of reasons. Has that changed the way you manage Sastria? I mean, what you would normally do in a case like that is you would have no choice but to hike premiums, because that would be the risk.
Which is what I've done, actually. I've been in the job 3.5 years now. 1 October, we did put in a rate increase because the outlook for us looks much more worse than it has ever been before. Looking at the challenges that South Africa is facing, but also South Africa is not unique. These things are happening all over the world, and we are seeing a rise of what we call SRCCs, this type of risk that Sastria insures. So think about it, Stephen, in Tanzania right now, there is an evolving situation where, the government, the elections are contested, the young people are protesting. Think Madagascar, where you've had a change of government. Think of Nepal, Bangladesh. So we're seeing these things evolving, and the front compete with South Africa in terms of the number of protests that do damage to property as well. So in one way, we're not unique, but in others, there are things that are peculiar to us. Some we are responsible for making them. For instance, the challenges we had faced at Eskom, the current water shedding that we are going through. Those, I believe, we've made them ourselves. We could have handled those situations much better. And we've got the young people who are unemployed. So that is normally a recipe for a problem in the long term if you do nothing about it.
I'm struck by the power of those words. The outlook has never been as bad as it is now. Sasria is an old institution. That's a big thing to say. I don't disagree with anything you said. I think you're probably right, but it's a big thing to say.
Look. If you go back, we've looked back.
Yeah.
As late as last week Thursday, I was at the University of Fort Hare. There, we're looking at a claim of a significant amount. I can go public because it's in the public domain already. We're looking at a cost of one claim, one university, 400 million rands. Now put it in the context of a company that's doing about 5.8 billion rands of turnover, of which about 12% you spend on buying reinsurance. So you've got this cost base, and then you've got this significant claim. It will take about 4 or 5 of those for you to be in a stressful situation. And you look at some of the time, as Fort Hare was going on, there were some issues at the University of Free State. Fortunately, the leadership there handled them quite quickly. So it's all happening all at the same time. It's a fast-moving train. We've got the challenges of Zamazamas, we've got explosives and guns, and these are young people, of which 81% of them are not South Africans or are undocumented people. So you look at that risk profile, and of course, the metro cities, they've got a dual problem. In fact, a lot of problems, but I will highlight 2 for the benefit of these conversations. One, the population in those places is growing rapidly.
Yeah.
So the infrastructure is just not coping. And then secondly, you put on top of that poor maintenance of the infrastructure. Then you've got a recipe for disaster. Things that were not there in the last 15, 20 years. So that's why we're saying, going forward, we really have to change the way we manage some of these issues in South Africa.
Is this another argument then, and from what you say, a strong argument, to sort of further recapitalize Sasria? In other words, to find a way to, either through premiums or to say over a 10-year period, government's going to do this, premiums are going to do that, to make sure that it's going to be where we might need it to be.
Look, it's never one thing.
Yeah,
so we're doing
also never enough.
Exactly. So we're doing a couple of things. One, I've already mentioned, we're doing the premium increase. The second one is the reinsurers are starting to have more confidence in South Africa. And it's more about that we tell them what is going to happen every year. We have to renew our insurance, and we give them our outlook. And then on the basis of that, they price for it. We have been fairly accurate, and we've kept our word. We said, look, you're going to see these challenges in South Africa. You're going to see these things popping up. This is how we're going to handle them as a country. And fortunately, things turn out that way. For example, the elections. We said, look, they're going to be stable. People are going to accept the outcome of the elections. Yes, it's more likely we'll have a coalition government or whatever you call it, government of national unity. And given all of that, this is where South Africa is going to land. And those things have panned out that way. So we buy additional reinsurance. And then what has been fortunate is that, we've got this relationship with Treasury as well, where we give them heads up every quarter as to where we are. They know the number where if there's an event in South Africa, I might ask for their assistance. That number at the moment is sitting at about 21, 22 billion. So if I have an event above that amount, they know that I will be calling. But before that, things will be fine.
Okay. I could go down this road the rest of the interview, but
Yes,
I'm not supposed to because it's fascinating. It's very, very interesting. I didn't know. Never mind. 16 minutes to 8 the time. You were the Shapeshifter on The Money Show. Mpumi Tyikwe is the CEO at Sasria. Mpumi, I looked you up on LinkedIn because that's often an interesting place to start. It's what people say about themselves that's kind of revealing rather than what they are. And your entry starts at Santam. Now, you obviously had a life before that. I presume you weren't born at Santam.
No, definitely. Look, I've had an exciting insurance career life, which started by accident. Oh,
your life or insurance?
Insurance. Okay. I will have to ask my mom that. I hope she's not listening. But Stephen, go back. I matriculated in 1982 in a place, Mzomhle High School in Dansane, which is a township near East London. We're proud of the fact that we're the second biggest township in the country after Soweto. Most people do not know that. I come to Johannesburg 1983, to Wits University in particular. And I had
How did you get into Wits in 1983? And you know what I'm asking.
Yes, I know exactly. It was a lovely story. I mean, then Anglo-American was on a mission to develop black talent, to develop black middle class, to identify, which people can be shapeshifters in the future, and so on. So I was fortunate. I was one of 12 students who were chosen by Anglo-American to study engineering. The other 12 will do accounting. So the group of 24 of us. And I guess they were the biggest funders of University of Witwatersrand. Yes, we needed to get permission from the minister of whatever those days. Nick Cornoff, he was the guy at that time. But Anglo-American, given its financial muscle, its presence in South Africa, it was able to do these things. Yes, and then I started at Wits. And then come 1985, I failed. And I don't tell my parents. And then my first son was on the way. Don't ask why. And all of that. And I'm turning 21 years of age. And so then I was looking for a job. Because you had to pass to keep on your bursary. And up the road at Wits, Jorrison Street, at the corner, now it's called Satu House, there was a company called General Accident. So I called them up and I said, you know what? I mean, I've just done engineering. I didn't succeed at Wits. Can you give me a job? And I could see the HR lady at that time, Elizabeth, that was her name. May God bless her soul. She laughed and says, come and see me. And then that's how my insurance career started in claims. Yeah.
You literally went and knocked on the door.
Literal. But then I called, those.
Rotary dial thing.
Yeah, exactly. Yeah. So I dialed in and she was very warm when I met her. And she says, okay, if you've done engineering at Wits, even though you failed, you must be pretty smart. So let's see what we can do with you. And almost 40 years later now, I'm the CEO of Sasria. Then from there...
It's an amazing story, that.
Yes, look, one thing I've learned, as a human being, you need some people who are going to believe in you, who are going to back you up, who are going to see something in you special, and they are willing to take risks with you. I mean, it was a huge risk at the time, and actually had fun. I mean, I can tell you more stories. My first international trip was because of them. I went to a mentorship program. I got global exposure by year 3. I was at their head office in Scotland. And dealing with the deputy CEO of Worldwide, he was my mentor. So I had these fortunate incidents. But some of them, I would say, they didn't come, is it Gary Play? You say the more you practice, the more like you get.
I get, yeah.
So I used to, because I was in the claims environment at General Accident, I used to go to work on a Sunday. So after church, I'll go to work on a Sunday. And that's when the CEO will also be in the building for some reason. And because it would be only the two of us, so he'll come up down from the 7th floor to the 2nd floor where I was. And he said, why do you come to work? I said to him, you know what, on a Sunday, that's when you can actually call the clients. Because remember, there were no cell phones those days and so on. They're not at work. In the afternoon, I can tell them what's happening with their claim and I can ask for additional information.
That was Mpumi Tyikwe, our shapeshifter this week, bringing a wealth of experience from his time in the insurance industry. He's been at Sasria for 3 years now and has a lot to say about where South Africa is right now.
The best of the Money Show
on 702.
702.
Personal finance this week, Warren Ingram, the financial advisor and co-founder of Galileo Capital, he looked at how to build and improve your credit score and how your credit score is actually calculated.
We often don't even know why they're important. We just know everyone tells us they're important. It really is a score, and very often it starts, for all of them, it starts at 0 and then it goes up to, in some cases, a maximum of 743 or 999. So it depends, because we get these ratings from credit bureaus. So depending on the credit bureau, your maximum score will be one of those, 743 or 999. And what happens is a credit bureau will give you a ranking, and the higher the ranking, the better your credit score. In other words, the more creditworthy you are. And it's a score that's then used by banks and other businesses to determine if you're a good person for them to lend money to, or are you going to be risky, and equally, should you be avoided as someone to lend money to? So your statement's right, Stephen. It's a critical number for us if we live in the world of debt.
Okay, so if your score is higher, the better it is for you. You are more likely to get credit.
Exactly right. So your starting point is you're not applying for debt, for no reason. You're looking for debt either to buy a car or a house or something, and so you want the highest score possible. If you do, it means that the institution that does the lending, so usually a bank, will say that's okay. We'll give you the debt. So that's step one. The higher the score, the better chance you've got of actually just getting debt. Equally, if you've got a high score, it might mean that they give you a slightly better interest rate, because the banks won't always just say no. So if you've got let's say an average score, you only score 600 or 650 or something, it doesn't mean that the bank won't lend you money at all, but they might say, this is quite a risky person for us to lend money to. So what we're going to do is we're going to charge them a higher interest rate, because we have to get paid for the extra risk that we're taking to lend to this person. Whereas someone else who's got a better credit score and is perceived to be lower risk, well, we can lend to them and we can charge them a slightly better rate because our risk is lower, and so we don't need to be rewarded for taking extra risk.
How important is how much money you've borrowed in the past? So if you're starting out, say you're just leaving home, you just finished school, and you have never borrowed money in your life, which is very likely. When you turn 18, you won't have been allowed to borrow money before. What happens then?
The irony in all of this is that you might be a fantastic credit risk. In other words, you're somebody, in your example, you've never borrowed before, you've never needed to, and you've got positive cash flow. So you've got no debts, you don't owe anybody any money, and you want to borrow a little bit of money. And so you go and apply, and it turns out that you get turned down because you've got 0 credit score, or they might give you a score of 100 out of 700 or 100 out of 1,000. So that's the one situation. Or on the other side, you might be somebody who says, well, I'm happy to just start work and I don't borrow from anybody. And at the age of 30 or 35, you've built up a nice deposit on a house. You've never borrowed from anybody because you've been saving diligently. And then again, you pitch up at the bank and you say, I want to borrow money to buy a house. And then they go, well, we've never heard from you before. You've never borrowed from us before. So, you're a high risk person. We don't want to lend you money, or we're going to charge you a fortune in interest because you just have no credit history with us.
Okay, then how do the banks know? So for example, I'm going to a clothing store and I want to put something on HP, which I know from last week we shouldn't do. So I want to do that. And they check my credit score. Where does the information that is used to compile my credit score come from? What I'm really trying to get to is, I've always believed the bankers are in it together, and this is clearly proof that they are.
There is so there are these businesses, they're called credit bureaus, and what they do is they build up a history of your treatment of your debts, and what they look at is what debts have you had in the past. So have you, for example, did you start out with a cell phone account, and how did you pay that cell phone account? Were you paying it on time with the right amounts? You didn't underpay, or alternatively, were you irregular? So you were a bit late with payments, or missed every third or fourth one. And if you were disciplined and you paid on time and you paid what was required and you always paid the right amount on the right day, then that means you've started to build up a history, and that history stays with you for a period of time, and that will then start to build up. Equally, if you were late and irregular, then that history also stays with you and starts to build up over time, and that will be a bad score. You'll start to build up a credit history that's not good, and therefore compromises your score.
Okay, so then I've never sort of seen. So if, for example, I have something that I pay for monthly, so say just a cell phone subscription rather than pay as you go, or prepaid rather. So if you have an account that you pay every month, the fact that you pay that, even though you're never actually in debt, so in other words, I'm not paying back money, I'm paying what I owe every month, that goes towards the credit history?
Yeah, that's and it's often one of the pieces of advice that we're given is if you haven't got a credit score, open an account. So not a debt. Don't go and borrow, but you can open an account and then start to build up a history of using that account correctly and paying it off as you go. And the reason why that works is because let's use the cell phone example. You're actually using the cell phone services for that month, and then you're paying them at the end of the month. So in a kind of roundabout way, you are borrowing money, I would guess, from the cell phone company because you're using their services, and then you have to pay it back and pay what you owe. And so building up a good history over a long period of time of paying what you owe is a good way to then build up the credit history. Equally, that if you don't do it, I think maybe one consolation here, if you've got some history of not paying your store cards or your accounts on time, that history starts to fade as time passes. In other words, it might really harm your credit score, in the first 3 months after you've not stuck to the program. But after 18 months, it harms you less, and after 2 years, it might disappear from your history. So fortunately, time is on your side as you go with these things.
Okay. The biggest debt most of us will have is probably a bond repayment or a mortgage. Does that get a greater weight if you are paying that regularly because it's so big? What I'm trying to sort of understand is people who, I would just presume that people who are making a decision about whether to lend Stephen money or not, the first question probably wouldn't be, is he paying his cell phone? Is he paying his bond?
Exactly, and because it's such a large amount, if you are sticking to the repayments, or if anything, maybe paying a little bit more, and so doing more than what's required, that will really help you on a credit score, because it shows the banks that you're able to juggle the needs of paying for your food and all the other things that you need to do, as well as your mortgage, and you're doing it on time or ahead of time, and so certainly that will boost your score quite a lot. Also, if you're not using your debt facilities to 100%, in other words, you've got a mortgage, but you owe 3 million rand, you're only using 2.7 million, and you're paying it down. It shows that you're not, absolutely at the maximum limit all the time. So a bit like driving, you don't want to drive your car at maximum speed all the time. That's going to break your car. And it's the same with debt. If you have a facility which allows you to borrow 3 million, but you only use 2.7, it means you've got room to breathe, and it means that you're obviously in control of things. Then equally, that you're paying it down and on time, that starts to boost your score. And the longer you do that, the longer you have that relationship with the bank, and the longer that bond goes on, so your history gets improved, because they'll look at that and say, you've had a bond for 8 years, you've never missed a payment, you're paying a bit of ahead of schedule. That's a very good score. That's a very good idea. Whereas, as you say, if you've got a cell phone account and you're spending 300 rand a month, very different story. Even though you're disciplined, it's not going to rank as high as paying off 3 million rand bond.
I'm sorry for the technical questions about how it works, but if I have a bond with Bank A, and now I'm trying to get credit from service provider B, how on earth, isn't there a legal issue that they now know what I'm doing on my bond, if you see what I mean?
Yeah, so you need to be very careful here. You have to be clear and transparent when you're borrowing money, or you're applying to borrow money, because you might think no one knows what's going on, but the credit bureaus are collecting your data, and so it will be found out if you're saying, I've got no debts. Meanwhile, you've got a big bond with one company, and you're going to go and borrow money from another company to buy a car. That will really harm you if you start to lie on your credit applications. that's going to be really detrimental. So don't assume that if you deal with two different financial institutions that your data is not being collated. The credit bureaus work across all of these institutions, and so that's the very first thing that a bank will do is they will take your credit application and then input it into the credit bureau to see, are you creditworthy? And if that comes up that you've either forgotten, which, I mean, it'd be quite tough to say, I forgot about my bond. I mean, you should know about it. In other words, you're not reliable, you're not honest, then that's going to either prevent you, they might not lend to you at all, or if they do, they're really going to charge you, a huge interest rate.
Does the type of debt and the variety of accounts matter? So in other words, if I just have a bond and a cell phone account, so that's not very diverse, am I going to get a different score to if I have a bond, a cell phone account, a car, this, a Fashini, that, or whatever?
I feel like I'm going to sit on the fence a little bit. So the variety of accounts does help you. So if you've got, to use your example, a few different accounts, including a bond and a credit card, etc., and you're paying them all off on time, and you're managing that, so you're juggling that load correctly, that will certainly count in your favor, provided you're not using up your entire salary to pay off all these debts. So if you're managing your accounts well and you have got a variety, and you've still got the financial capacity to deal with that, then you're in the pound seats as far as getting probably a brilliant credit score. Equally, if you've got a whole bunch of different kinds of accounts, and you're using up your entire salary to pay them all off, then that might start to harm you, because it means that you actually can't afford the debt that you've got, and at some point the road is going to run out on you, and you're going to get yourself into trouble. So it is good to have a variety of accounts, and certainly managing them well and managing them affordably will enable you to get a very good credit score, and that might help you improve interest rates on home loans and all of those things. So I do like the having the variety. I think it works, but just be very careful that you don't suddenly get yourself into trouble with too much debt.
Warren Ingram this week on personal finance and just helping you to understand your credit score and where it comes from.
702.
You are listening to The Money Show's best bits.
The international executive coach, Tshepo Matlou, he is someone who has been very interesting in how you build a career that is about helping other people. Is it about listening? Is it about talking? And particularly as the workplace changes and you get different strategies and different challenges. Tshepo Matlou is our My Money guest this week.
I think in simple terms is a strategic support, someone who creates a space for an executive not to feel alone. So executives, majority of them, they have qualifications, they have the experience, they come from multiple backgrounds. But as you go higher up in the executive chain, you start to require a different person that can support you, that can assist you in the work that you're doing so that you can navigate complex business challenges and decisions, and the ability to actually start looking at your own emotional intelligence, strategic thinking, how you communicate, how you build culture in organization. But what we don't do in coaching, we don't advise, so we don't tell executives what to do, but what we do, we work with them cultivating what they know and how we can grow them, helping them to see blind spots and also to be able to look at areas of development. And that's why coaching starts with goal setting. What do I want to improve, or what do I want to do in the next level of my career or positions or power or whatever that the executive will need in the coaching space.
So you don't teach someone how to scrum, you teach them how to win the game through all sorts of means. Would that be a good way of putting it?
Not really teaching. I would like to use the word support because teaching has, so we transfer the skills. But with coaching, we make an assumption that you might have the skill and not know how to use it, or you might have the expertise or experience and require support from someone else who won't judge you, someone who's not emotionally involved, someone who will be able to ask questions. So in simple terms, coaching is about asking questions what we call empowering questions in order for someone to be able to build themselves up.
How do you get into it, Tshepo? Because, I mean, I would think that most coaches have some sort of experience, not necessarily in the corporate sphere, but of life. So how do you get into it? I know you have your own story, obviously.
Yes. I think generally, if you would like to become a coach, you must study a coaching course. There are multiple coaches in the market, even with universities these days. They also have coaching courses. There's also short courses where so that you can decide whether this field is yours or not. And I want to say this because we have a lot of people listening, that there are people who call themselves coaches, but they have never attended even a course, or they are actually not trained to be a coach, and they are not even a member or an accredited member that belongs to a body that ensures that the coaching they're doing is authentic, is true, and it is within a certain framework. So coaching does require someone to go and study to become a coach.
When you are speaking to someone that you coach, and I imagine there are different spheres and slightly different approaches, is most of your job about talking, or is most of your job actually about listening?
So most of my work as a coach is about listening and exploring. So imagine that somebody is in a cave and they're an expert in how to cave, but then they want someone to look at them from a distance and listen to them and make them feel like they're not alone. So I always say coaching is like a think tank. It's like you are up there as an executive. You don't want to talk to your personal assistant or your junior staff members, but you want to talk to someone independent out of your organization, someone who can be able to show you the blind spots and things that you're not seeing. So I'm there working with this gentleman or lady as they go in and cave, and I'm asking questions. So how far do you want to go? I want to go 15 meters. How are you measuring to make sure that you're going to be there? So those are sort of conversations that we have. So it's called the coaching conversation.
How did you get into it, Tshepo? Because you were actually in a leadership position at quite a young age.
Yes. So I became a manager at the age of 21, and one of my struggles was blending in the culture and the traditions of how I was raised. So I was raised in a village where elders are respected. So when I became a manager, I struggled with managing people who were older than me. And by the way, I was the youngest. So it made it difficult. And I met a lady called Karen, who then explained to me about how I can manage better. And she then introduced me to coaching. She introduced me to coaching, I would say, around 2003. And I thought, okay, I don't understand this concept. But what I started doing was to start researching first. And that's how I got into coaching. So 2013, that's when I did my first life coaching course. By the way, Stephen, I just want to make a comment when you said, so you could become a coach, let's say a life coach, because you have life experience. And that's what I thought. And when I went to do my life coaching course in 2013, I found that, wow, it was actually different. I didn't actually need to use my experience, but it is about the experience of the person I'm coaching. But the experience, trying to agree with you, Stephen, gives you the structure to be able to ask the right questions. So if you're going to coach doctors, you need to at least try to understand the medical language or the terms, just to be able to ask questions. But it's not a must. I'm just saying it could be an advantage. So these days we see these people calling themselves financial coach, health coach. We're seeing so many coach terms coming up, and they're being specific to say, I coach people on this, on that. But majority still do the telling, which then basically just removes the term coaching or differentiate it from the trained coach with a self-made coach.
So this is about, in a way, legitimacy, or to put it another way, why should I listen to you, right?
Yes.
And if you have the experience, I mean, that kind of stuff is easy. Do you have to convince someone who's maybe older than you, someone who has a lot more life experience, someone in a very senior position that you've never been in? Do you have to prove or display, maybe is a better word, show why they must take you seriously?
It does happen, Stephen. And I think I want to say to those that are listening, if you're an executive or a manager, that it is said when you have a great coach and you actually start to question the experience and qualification. And then it's of course it's okay these days because we have so many people who are not coaches. But I just want to say that we have great coaches who actually can coach, and it's okay to question. But then don't make a mistake to say, I'm a general manager, I want to become a CEO. Therefore, if you have never been a CEO, you cannot coach me. In my case, I will say, luckily, I've worked myself up to an executive position. I've sat in 2 boards. I also was a chairperson of a board. So that experience, yes, then talks for me. But I've met other younger coaches or same age as me who might not have been exposed like me, but actually they have the right experience in terms of coaching. So yes, it does help in terms of the experience and qualification, but it shouldn't be like the only thing that we question.
No, sure. I mean, I remember the first time I went to a doctor that was younger than me, and it was fine because they were a doctor, if you know what I mean. But there is that funny moment. You spoke about, and you mentioned how you were a manager at 21, the youngest person in the room, and how difficult that was. I wonder if our society has changed quite a lot, and I don't think that's so rare now. Do you think that that age sort of issue where people don't want to be led or managed by a person younger than them, it might still be there, but it's kind of less of a thing?
Yes, it's still there, unfortunately, in certain industries. And just to say, maybe linking your last question and this question, I also had an older person question me as a coach to say, at your age, I don't think you could be able to coach me. And we are seeing that even in careers. I'm tempted to mention the industries, but I don't want to do that because most of them are my clients. But there are certain industries when you go on site and you can see that this young person is 26 and is a manager of people who are in their 40s and 50s. And there's an issue here. He doesn't understand us. He does their language issue. There is so many things that are coming up. And obviously we're seeing technology as well. It's not really helping us. Technology is supposed to enable us to become efficient, effective. But what we are seeing is that people are starting to fight with technology. Now, bringing in young leaders and technology coming in at the same time, it unfortunately creates a problem for us as a country and in multiple spaces that I don't want to mention.
When you speak to executives, are there certain things that you see coming through again and again, and is confidence one of them?
Yes, confidence, it is one of them. There is something else that I want to bring in. So after being a coach for 5 years, what I then realized was some of the leaders I was coaching were also making emotional decisions. And when I say emotional, I mean exactly that. So someone has a traumatic experience or was bullied in his or her last position or grew up in a space where they didn't really have much attention. And what they do is they carry this into their position. And now what I then started researching on was around how can I actually reposition the coaching to start looking also in the wellness side. So my coaching has now blended. So that was the first 5 years. I've been in coaching for 10 years this year. So in the last 5 years, I've then blended that. So even in my questions from the beginning, I start looking at their wellness side. So what are you doing in terms of health? How are you dealing with your emotional side of things? How do you see your emotions coming up? What triggers you? And some of these questions that I ask are deliberate to make them understand the impact of their actions and decision. But yes, confidence becomes one of them. And I think the reason for confidence is because people sometimes are not sure whether they're doing the right thing or not. And I'm seeing also junior managers who are very good in operations. And when you give them a strategic position as a leader, they struggle to adjust to strategy because they still feel good with their expertise. And then when you become an executive and I have to sit with you down and I hear you still talking about operations, struggling to adjust into strategy and thinking strategy is complex. So we're not giving people room to learn, develop, and become executives. When somebody is good, we quickly promote them. But are they ready for the next level of their position?
An important conversation there, I thought, with Tshepo Matlou on the role of executive coaching, talking about how you improve decision-making and enhance your emotional intelligence.
702.
The best of the Money Show from this week.
Your business book review this week. Ian Mann, the Managing Director of Gateway's Business Consultants. The book, Rationality, What It Is, Why It Seems Scarce, Why It Matters, with Steven Pinker. And Mann unpicking Pinker's central argument about human progress, why evidence matters, and rationality.
Fundamentally, he says the most important thing we can possibly do as humans. And the key always is we make such a mess. We're so illogical as humans. And we do so many things. It seems to point to the fact that perhaps this idea of a Homo sapiens, which means the smart hominin, is a bit of a misnomer. In fact, we're not all that bright. And what he does, he starts with a very interesting contrast. He looks at the Khoisan, and he looks at these people who've been living under harsh conditions for literally thousands of years, and they are very logical, rational people. They're not people just throw spears at animals. They plan. They think, they use game theory, they use all sorts of, not game animals, but the game theory. And scientists have shown how they really behave incredibly rationally, with the result that they've been able to survive for thousands of years under terrible conditions. So being rational is not a Western thing. It seems like it's a human thing. The question is, how can we have achieved so much? I mean, as humans, we're so smart. We can dump a huge ton of metal on the moon, on Mars, and go and drill and take out some sand. We can do amazing things. When we get back to Earth, we behave like complete idiots most of the time. And his whole thing is, why does that happen? The thing what's so nice about this book, what makes it so interesting, is that it doesn't have to be like that. And that for the most part, irrationality is something that it's almost like the lazy man's out. I'll give you what he does. He quotes a researcher who's been given type puzzles to people, and they look like they're mathematical, but they're not mathematical. They're logical. And even when he's given them he's done the study on thousands of university students, including MIT students who really think they're very mathematically gifted. Out of the 5 questions he gives them, they usually get about at least one wrong. Questions would be something like this. You've got 4 printers. They can print so many pages in this time. If you have 24 printers, how long will it take you to print exactly the same document, and how much time will that take? So, well, if 4 takes 2, multiply it by the division, and you come up with a number. The answer will be exactly the same. That takes us but a moment or two of thinking to be able to see that that's how it has to be. So he says that what happens with people, it's got nothing to do with intelligence. It has much more to do with the fact that we are impulsive and we don't make good decisions. And when you look at how we deal with time, we make very bad decisions in our lives because of impulse. There was a study done, a very famous study done with kids where they gave them a marshmallow, the marshmallow test. And if you didn't eat it now, you could get another one later. Yes.
Yeah.
He says, we're like that all the time. And we don't save, which is really a safe thing to do, but we do gamble, where you're guaranteed to lose. So we do have all these irrational behaviors. And his whole thing is that it doesn't have to be that way.
So, I mean, in a way, it's about deferred consumption, which is really what the Money Show is about.
Indeed.
I've met some people and come across people and watched some people who I can see are very irrational, and I've found them intensely irritating, Ian.
Yes.
You understand what I mean?
Indeed. I think that the rational, I think what happens with most people that we don't think we should be rational. I'll give you an example. In the United States, about 36% of people believe in haunted houses.
Yeah.
But only 32% believe in ghosts. Go
So,
figure.
yeah, where how does that
Then
work?
you have people who have a dream. And I saw somebody, my friend, and 2 days later I meet the person.
Yeah.
Dreams obviously have some truth in them. Well, all dreams, or the one by mistake that you remembered, or that you have now. Now people are terrified of tornadoes. I mean, and the thing about tornado, it's photogenic.
Yeah.
The most dangerous thing, if you had to compare, which is more dangerous to you as a human being, asthma or tornado?
Yeah.
Asthma by about 25 times is more dangerous. But we're confused about these things. And if we only wanted to be more rational and think more rationally about things, we probably would come up with better examples. Better outcomes.
Does he explain why it seems scarce? And I mean, I'm interested in particularly this time. He wrote the book 4 years ago.
Yes.
But the dynamics that we're seeing, particularly in the US, were starting then.
I think that if you ask me in general why this happened, it happens through lots of different things, such as some things are photogenic, some aren't. Some things seem immediate, some aren't. Anything that we get used to, we don't worry too much about. So I think that we are easily deluded, and if the only way we can get out of that is making a commitment to wanting to be more rational. And since we don't have a desire to be more rational, the need is there. We just don't have a desire. I think we flip into something which isn't rational, and this is a species, and that's what's so nice about his example from the sand. Human beings are a smart bunch of people naturally. We just have to learn. And by the way, there's lots of techniques in the book. If I give you one simple example, if you said there's a woman, she goes to protests all the time. Is she a nurse or is she a socially conscious nurse? And most people say, clearly a socially conscious nurse, but not, because there are more nurses than there are socially conscious nurses.
Yes.
And if you didn't know who she is, rationality would say choose that. And there's all sorts of other interesting things, including morality. Morality, he shows, is also rational. I can't say, you may not hurt me, you may not hurt my children, and you must feed me, but I can hurt your children. I can not feed you and expect people to believe that. When we start thinking of rationality as a desideratum, I think that's why we'll become much more rational. And the book, I think, is an inspiration.
When you talk about impulse,
Yes.
is that also why rationality, also known as saving,
Yes.
is boring?
Yeah. If you look at this, time changes a lot of things.
Yeah.
And on the one hand, people say to you, look, if I eat healthy and it gives me extra years, I'm going to have extra years when I'm really old and I can't even enjoy it.
Yeah.
So a big deal. So we have all sorts of good reasons not to be rational, and in my lifetime there were foods which we knew were bad for you. You shouldn't have eggs. You shouldn't have this. You shouldn't have that. And now they're good for you.
Yeah.
So the subtleties of these things are not obvious, and I think that the beauty of reading a book like this is you can see why it's important, but also you can see where the subtleties come in, and you can get around the subtleties. You're more likely to catch yourself saying or doing something irrational. We know for a fact, science has proven this, that the cleanest, safest form of energy known to mankind is nuclear power.
Yeah.
And if you look at how the nuclear disasters, well,
They're very photogenic.
they're very photogenic and they don't kill people. They kill very, very, very. More people are killed in accidents or by smoke or in mining accidents or by trucks delivering coal having accidents. Many more people kill their way. But we don't think we need to be rational about all the decisions we make.
That was a very interesting conversation with Ian Mann in your Business Book Review, giving a very interesting breakdown on Steven Pinker's arguments in Rationality, highlighting how evidence-based thinking has shaped human progress.
The best of the Money Show.
On 702.
702.
You've been listening to the best bits of The Money Show, just a digest of some of the most interesting and important moments on the show this week. If you'd like to hear more, please go to our website or your podcast app and search for The Money Show. Thank you for listening. We're back with The Money Show, 6 o'clock on Monday. Have a good weekend.